Good afternoon, everyone, and welcome to today's webinar. I am Chad Olson, the Director of State Government Affairs at the American Dental Association. On behalf of the American Dental Association, I am very pleased to bring you today's presentation, Small Business Administration Loans, Understanding the Options for Dentist Owners. We have three speakers today. Mike Graham, who is the Senior Vice President at the ADA's Division of Government and Public Affairs. Megan Mortimer, Congressional Lobbyist with the ADA, and Alan Schiff, who is the President of the Academy of Dental CPAs. We also have on hand Kathy Albrecht, Senior Associate General Counsel here at the ADA, and Brendan Sweeney, an attorney at Jackson Lewis, the law firm we have hired to help us with labor questions. They will be on hand during the Q&A for questions dealing with that topic. Now I'd like to turn it over to Mike, Megan, and Alan. Take it away.
Thank you, Chad. I appreciate it. And thank you, all of you, for joining today. It's important that you hear this presentation. It's very timely. Thank you especially to Megan and to Alan, who helped us put this together. And Alan, who is president of the Academy of Dental CPAs, been absolutely fantastic to work with, and as well as all those accountants who we often are on calls to discuss how this plays out. So if we could go to the first slide. We want to talk first about the economic injury disaster loan, or the EIDL loan. And I know I think so many dentists have applied for the EIDL loan already, but this really does set the stage for the discussion that we're going to have for the rest of the hour. And again, if anyone knows of any dentist who has not applied for the EIDL loan, we are recommending that they do so. And you can do it through the website that we have on the screen. If we could go to the next slide, please. So just to recap, an applicant can request an EIDL grant of up to $10,000. What we believe is happening is that they will get back to the applicant, in our case the dentist, with as soon as they are ready to process the grant. And so in our conversation today, Alan shared with us that some of his dental clients and some of his colleagues' clients have actually finally received word from SBA that we've received your application, your loan application, and that you have been accepted, you're eligible, and we will begin processing your money out. And now that is apparently when they're starting the 3-day clock. So you can share with the dentists that they will be contacting you with a message that, yes, we're going to start releasing the funds, and that's when they should expect the funds to show up within 3 days. Now, and lastly, everyone knows this grant does not have to be repaid, even if you are not approved for the loan. The next slide, please. Okay. Hopefully all those folks have checked the right box. They've used the right application. There is a finite amount of money, $10 billion to our knowledge. The $10 billion has not been used up, but it is first come, first serve, so it will be used up at some point. Next slide. All right, just to make it clear, the EIDL loan is available to pay for operating expenses, but you can pay for payroll and benefits with the EIDL loan. The terms are 3.7%, up to 30-year repayment, 12 months of no payment, but interest does accrue. The SBA will determine the amount of the EIDL loan, and that will, originally we were told it was based solely on credit score, or primarily on credit score, but we believe now that while credit score is still an important determinant, it will also be on total collections and total operating expenses. And that is part of the application that was in the revised application form. And actually, the last bullet point is something that we've come to the decision, as so many of Alan's colleagues, that you really should try to keep the idle money separate. In other words, if you plan on getting the PPP loan, which we'll discuss here in the next slide, we're suggesting that you keep the idle money separate from the PPP money. And we'll discuss that a little bit more. But let me turn it over to Megan to start the conversation about the 7A PPP loan. Megan?
Thanks, Mike. Next slide, please. So the next part of this presentation is going to talk about and discuss the Paycheck Protection Program loans, otherwise known as 7A SBA loans or PPP loans, which is how we'll refer to it from now. 7A is just a category of loans that already exists, but the Paycheck Protection Program loan was one that was established by the CARES Act to give a lot more flexibility for applicants and to include loan forgiveness, etc. So this loan will be approved by SBA approved banks. I can supply anyone with a link to be able to search for lenders in your area. I searched myself and found 5 that popped up within the first day, so they're out there. They're available April 3rd for small businesses other than sole proprietors and independent contractors. And then sole proprietors and independent contractors can also, again, begin applying for their own loans this coming Friday on April 10th. Next slide, please. You can find the preferred lenders here. Here's the link, as I said before. Congress provided $349 billion for these PPP loans under the CARES Act. Now, as probably you've seen in the news, for a very rare occasion, we have the administration, the Speaker of the House, and the Senate Majority Leader all in agreement that they need to fund at least $250 billion to just the PPP program, because the fear is that the funds will run out given the demand for these loans that has already occurred. We expect that vote to happen as soon as this week. They will do it under something called unanimous consent, where they won't have to come in to do it. And we're hopeful that there won't be a lot of political theater that goes into this process over the next couple of days, and we can get that done as soon as possible. Next slide, please. The terms are pretty straightforward. 1% interest up to a 2-year repayment. Treasury made that decision. They could have done 10, but they decided to do 2 instead. 6 months no payment, but again, interest accrues. And then the PPP loan amounts will be determined by calculating 2.5 times your average monthly payroll costs. This includes gross payroll, retirement plan contributions, health insurance, and state unemployment taxes. This does not, however, include federal payroll taxes, so please keep that in mind. And it also includes employee owner compensation up to $100,000. Next slide, please. And then independent contractors, as we stated before, can start applying for these loans themselves starting April 10th. But you must be aware that independent contractor employees, because they are eligible for their own 7A loans, cannot be part of the calculation that is determined for the loan amount or the loan forgiveness. And again, those individuals can start applying on Friday. Next slide, please. I'm going to let Alan take over now because I know he is well versed in this area and will be here to answer questions at the end.
Megan, thank you. Mike, thank you. Good afternoon to all the attendees. Thank you for having me. As you can see on the slide here, we're talking about the Paycheck Protection Program loans and the EIDL loans, the Economic Injury Disaster loans. There was a lot of confusion when these first came out, but over the weekend, the ADA helped us in a really, really great way because we found there was clarity in terms of you can apply for both loans regardless when you receive the loan proceeds. So there was a lot of confusion over that, but the good news is you can apply for both loans. You could use your EIDL loan for payroll, as Mike mentioned earlier. And if you do use it for payroll, that portion of the EIDL loan needs to be refinanced into the PPP loan. If you don't use it for payroll, you have the option to refinance the EIDL loan into the PP loan as well. Next slide. According to the SBA, no more than 25% of the PPP loan proceeds should be spent on non-payroll costs, and that would be for rent, a mortgage, which would be the interest on the indebtedness, and utilities, and that's over an 8-week period, so about 2-month period. The other 75% of the PP loan can be used for payroll costs being defined as your employees' gross salaries, their health insurance, and their retirement plan. The PPP loans are capped at $10 million. That's per individual entity or affiliated entities, $10 million. Next slide. There will be an amount of eligibility of the PPP loans for forgiveness. The amount will include the payroll costs and other operating costs that we previously defined within the 8-week period following the origination of the loan. The amount of the loan forgiveness is contingent upon having at least 75% of your employees back to work by the end of June, and the measurement date would be February 15th of 2020. So for example, if you had 20 employees employed as of February 15th of 2020, you need to have 75% of the 20 or 15 employees employed by the end of June to be able to take advantage of the forgiveness.
Now, Alan,
yeah.
didn't we get some update from Treasury last night about how they are defining origination of the loan in terms of when you will be starting that 8-week period and then the time in which they have to receive or distribute the money to the borrower?
Yes, we did. And Megan, correct, because this is like breaking news, so please correct me if I'm wrong. The 8-week period, according to what I'm understanding now with the updates, begins when the lender makes the disbursement of the PPP funds to the borrower, and the lender must make the first disbursement of the funds no later than 10 days after the loan's approved. Is that your understanding as well?
That's what we read according to Treasury, that updated in the middle of the night last night.
Yes. And I think what we should tell Megan and Mike, what we should tell the attendees, this is all very fluid. This is our information as of today, April 8th, and it potentially could change as it's been changing over the last 3 or 4 weeks as we've been understanding this. Megan, you have a comment on that?
No, you're exactly right.
This is very fluid. Okay, next slide, please. Okay. It's our recommendation that you should apply for the PP loan. You should apply now. Each of the banks require different financial information. For example, some banks require 12 months that begin on April 1st of 2019 through March 31st of 2020. Some banks require just the calendar year of 2019 for the 12-month payroll. There's one bank that actually requires 15 months worth of payroll, and there's another bank that requires copies of your employees' W-2s. So it's unfortunate the submission of the financial data isn't consistent, but unfortunately we have to deal with the banks that we're working with, and we're at their mercy in order to get the PP loan potentially approved. And Megan and Mike, I think it's important here that we remind everybody the EIDL loans are being administered through the SBA, whereas the PPP loans are being administered by your local bank, that being defined as a bank that's a preferred lender with the SBA.
Well, Alan, if I may, and this is probably our fault. We changed this slide a little bit. So let me take a step back if for everybody. So you've got your EIDL loan. We've talked to you a little bit about what a PPP loan is, and now we've got 3 slides, including this one, that we want to walk through some scenarios, if you will. And so scenario 1, which is the slide we're on now, is if you applied now for the PPP loan, just to clarify, what would happen? Well, and Alan got into that. So if you applied for the loan now, it has to be dispersed, as we talked about, within 10 days. And then you have to spend it within the next 8 weeks or 60 days. And what you would have to use that on would be, or you may be paying your employees. If you did that, you may be paying your employees even if they were not working and still at home. And it may be possible that your team could earn more money on unemployment. So that's a scenario that could happen if you applied now for that. And Alan, the next slide, of course, if you can go to that, talks about a different scenario. So if we could switch to the next slide, and Alan, why don't you
Yeah.
go over that? And I
Yeah.
apologize because we did change the loans, the slides, and that's my fault.
We're good. We're good. So this is another scenario that we came up with. Apply now for the PPP loan. Have the loan origination date delayed if possible. Some lenders are offering you that option. Or you could wait to apply for the PPP loan until you're ready to reopen, even though Congress is considering increasing the funding for the PP program. There's still a risk that that funding could run out. So you must also originate the loan as of today before June 30th of 2020. That date has not been extended. Megan, let's go back to the second bullet because I'd like to hear your opinion on that. Wait to apply for the PP loan until you're ready to reopen. Even though Congress is considering increasing the funding for the PP loan, there's still a risk that funding could run out. So now, Megan, with this unanimous consent that we have potentially coming Thursday or Friday with the $250 billion, what's the likelihood, from your opinion, of the money's running out?
I mean, I think it's 50-50. And I think it would be a little bit more difficult to appropriate even more funds to this unless they decide to do that. This is a huge chunk of increase. It's a 71% increase over what they've already appropriated. And, you know, just one of our lender friends had 179,000 applications in 48 hours. So I just want to make people aware of the fact that you can take, you know, the risk and perhaps delay, but there is no guarantee that the funds will still be there if you decide to wait till June 1st, for instance. So,
I would say, though, that I agree with everything Megan said, but when you infuse another $250 billion into the process, it might buy us a few more days to make the decision as to whether or not I, the dentist owner, may want to take out that PPP loan or not. And we're going to get into that a little bit further down. So
completely
Okay.
agree. It might buy us days, but I don't want anyone assuming that it'll buy them weeks.
agreed.
Right. Next slide, please. Thank you. So this is another scenario we came up with. You could get the PP funds now, spend the funds on the eligible costs during the 8-week period of forgiveness. You're potentially going to have to hire your employees back by June 30th, or you could receive the funds, keep the employees on unemployment, don't use the majority of the funds during the 8 weeks, and what you end up with is a loan that will be priced out at 1%, that's payable over 2 years, and for the first 6 months of that 2 years, there are no payments required. Interest would accrue during those 6 months. So that's another scenario we came up with, that in fact you could get the funds now, you could potentially expend it on the cost. You may have to hire your employees back. They're currently on unemployment. These are a lot of questions that you potentially, as the employer, have to decide, and potentially need your accountant's input on this as to what's best for your practice. Okay.
Actually, this is perfect. We can go to the next slide. This is exactly the decision point that I think a number of our dentists have reached right now. So let's assume they've all applied for the EIDL loan. The terms are great. It makes sense. It doesn't cost you any fee to get that EIDL loan. If you don't need the EIDL money, you can actually pay that back and there's no prepayment penalty. So all that's great. But now the dentists are in that position where, do I get that PPP loan or not? And actually, there is another alternative, and that is the retention tax credit. So Alan, could you talk a little bit about the retention tax credit?
Yes, of course, Mike, I'll be happy to. So this is a either or. In other words, you either are going to have our dentists file for the PPP loan, or in lieu of that, they could take on this employee retention credit. So the way the credit works is, and this is a really good slide, the bullets are right on point. Employers are eligible for a 50% refundable payroll tax credit on wages paid up to $10,000 during this crisis. And the big thing here is if their practice has seen a decrease in gross receipts of 50% when compared to the same quarter. So what that's saying is, let's go to, let's say Q1, which really wasn't impacted. If our practices in 2019 collected 100,000 and in 2020 collected 90,000, that's 90% of last year's collection. So we wouldn't meet this particular rule. We probably would meet this rule during the second quarter. That would be April, May, and June. Let's say during the same period of 2019, it was about 100,000. And then the same quarter this year, it could be 50,000 or less. And then you would qualify for this particular credit because you would be less than 50% of the collections from this year's quarter compared to last year's quarter for the same quarter. So the way it works is you could pay an employee up to $10,000 moving forward as we go back to work, and the credit would be 50% of up to $10,000 per employee. So a lot of practices have maybe an office administrator. You could have 2 folks up front in terms of front desk. You could have 2 chairside. You could have 2 hygienists, and that's potentially 7 employees. Let's assume they all get paid greater than $10,000 during the remaining part of the year. So effectively, they would get 50% up to $10,000 or $5,000 at 7 employees. That would be potentially a $35,000 tax credit. Remember, a tax credit's better than a deduction. A credit is dollar for dollar reduction of your tax liability. So this is something that we would encourage all dentists to talk to their CPAs about in terms of, does the credit make sense or does the PPP loan make sense? This is for practices with 100 or fewer employees, and it's based on wages paid March the 12th through the end of the year. And the wages, besides wages, they also include health insurance if you have trouble getting to the $10,000. But I would suspect most of you would have practices that would equal at least $10,000, if not greater, on just wages alone. And the big thing you see on the bullet number 4 here, and I want to emphasize this, if you receive a PPP loan, you cannot take advantage of the retention tax credit. So you can either get the credit or the loan, but you cannot do both. Megan, anything you'd like to add on this as well?
No, I think you've covered the nuts and bolts of it. I'll let Mike kind of transition us out, and then.
Well, let me give you so thank you for that, Alan. Let me give everybody an example. So I received a call from a dentist about an hour and a half ago, and the dentist kept his employees on was paying for his employees out of his pocket for 2 weeks after he was told that their office had to close down and be open only for emergency. So he was paying them out of his own pocket for 2 weeks. After 2 weeks, and we've now gone on, this is basically 3.5 weeks, he decided to furlough all of his employees, and he had 9 employees. And he said, I'm getting ready to sign the papers for the PPP, and I was calling just to find out, is that the right thing to do? And I said, well, I'm not an accountant, but let me ask you a question. You have 9 employees. Are they making more money on unemployment or less money than you're paying them? And he said, well, interestingly, they're either making more money on unemployment or about the same. And I said, well, what's the advantages of taking out the PPP, since the majority of his employees actually make more money right now on unemployment? And he said, well, I guess so I can just pay them. And they, by the way, none of them have any health care through this dentist. They all have it through their spouses. So I said, well, before you sign the papers for the PPP, I think this is when you sit down with your accountant and you talk numbers. Because if there's no real obvious advantage to taking the PPP and your employees are actually doing better by and large under unemployment, and by the way, you've already paid 2 weeks for those employees, they would probably, you would be eligible probably under the retention tax credit for at least a 2-week period that you paid, if I'm not mistaken. Alan can correct me.
Yes.
So there's a decision point that the dentists need to make, perhaps before they sign the PPP. So in other words, you've got your EIDL, you applied for your EIDL loan, that money is coming. The next decision point again is, do I sign for the PPP or do I go for the retention tax credit? It's at that point you may want to sit down with that accountant. Now, Alan, you and I talked before, and you said, well, maybe it'd be interesting to find out how much PPP you're going to get. So you might want to add to that a little bit. But I thought that was an excellent example of a decision point that a dentist owner might have to make.
Right, Mike. Thank you. Well said, Mike. And it's interesting. You just got that call an hour and a half ago prior to our webinar right now. And these are going to be a lot of decisions that the dentists are going to have to make in the next couple of days and, ensuing weeks. I guess the big thing here, Mike, is with the PPP computation. So many banks have a PPP loan calculator. So I'm going to try to give it to you like kindergarten math so you can potentially understand this. There's really 4 factors in arriving at the PPP potential loan from your bank. So it would be the gross payroll, which would be divided by 12 to get you a monthly payroll. And keep in mind, any employees earning over $100,000, they're limited to $100,000 on an annual basis. You would add to that the 401k or the simple matches or potentially your profit sharing or cash balance plan that you paid over the last 12 months. Get the annual number and divide by 12. So you have that. If you have health insurance that you're paying within your practice for yourself and your employees, you would total all that up for a 12-month period and divide it by 12. And now you have a monthly amount for health insurance. And finally, the state unemployment insurance that you've paid within your practice, depending on what state you're located in, you take all the state unemployment for the 12 months and divide that by 12. So you have 4 numbers. You have average monthly payroll, you have the average health insurance, the average retirement plan benefit, and the average state unemployment. You would total all those numbers up and you would multiply it times 2.5. And that would give you a rough idea as to what your loan, your PPP loan would be based on the information you submitted to the bank and the bank's approval. What Mike is suggesting to me is take that number and compare it to potentially what your employee retention tax credit is and weigh in on the two and discuss it with your CPA, your accountant, to decide which of the 2 programs would be best suited for your practice, the PPP loan or the employee retention credit. So, and this is a good bullet on the slide. This thing is so fluid. Let's say we have 500 people in this webinar. You have 500 different agendas. Each agenda is different. And that's why we're highly encouraging you to meet with your financial advisors, your tax advisors, to determine what are your best loan options for your practice. Mike?
I think now, unless Megan has something to add, we can probably start taking some questions.
Hi, panelists, and thank you so much for your comments. We have had the questions flooding in. One that's been recurring that I think I know the answer, but I think the listeners would appreciate it being restated. Can the employee retention tax credit be used for payroll costs incurred prior to when the PPP will be used for payroll? Can you claim the tax credit and apply for the EIDL and PPP loans?
Okay. Megan, I'll go first in case you want to follow me. You can only have one or the other, Chad. You cannot have the PPP loan and then eventually use the employee retention tax credit. It's either or. That question may have been asked before we got to that point. Megan, anything you'd like to add?
No, yeah, it's an either or. So even if you took the tax credit before and then decided to apply for the PPP loan, you'd be denied the PPP loan because you've taken the tax credit.
Right.
But just to be clear, you can take the EIDL loan and use the tax credit.
Right.
Yes.
Good point, Mike. So what Mike's saying, you could take the EIDL loan, you could take the tax credit, you could take the idle loan and you can file for a PP loan, but you couldn't take the tax credit because now you have a PP loan that potentially you accepted.
Thank you.
Good question, Chad.
Well, I appreciate it. I didn't come up with it myself. So one question, a couple of questions related to labor. So maybe we can have the attorneys we have on the line weigh in if they feel the need. But the question is, if you've laid off your employees and have applied for the PPP loan, when do you hire back your employees?
Well, actually, we can answer that question, and you would hire them back as soon as the money showed up into your account. You're required to do that, so you can't delay that. So the PPP money, what you've applied for the PPP. Your employees have been furloughed, let's say, they're on unemployment. Once that money shows up in your account, that's when you have to bring them back, and you've got the 8 weeks or 60 days to do that.
Yeah, just to be clear, you have to bring them up to 75% by the end of the 8 weeks. So we know that some people are going to have a hard time hiring everybody back the same day they receive the loan, which is why the CARES Act put that buffer in, that you just, by the end of the 8 weeks, you have to have your employees up to 75%. And you have to apply for the PPP loan before June 30th. After the June 30th deadline, as of now, they have not extended it, you will not be able to apply for the PPP loan.
Thank you. Another question, can you use more than 75% of the PPP loan on payroll? For example, using 100% on payroll, and it still be considered for full forgiveness?
Absolutely.
Great.
Megan, I think the question was the PP, Chad, was that the PP loan that you're referring to?
Correct, the PPP loan.
If you use 100% for payroll, then you can get, yes, it's 75, you have to at least spend 75%, but if you spend 100% on payroll, that would be the best possible outcome, I think, that Congress and the administration is looking for.
Here's another question. Thank you, Megan. It seems like PPP is not useful for independent contractors. Can you talk about how idle loan money can be used by an independent contractor?
Brendan, is this maybe something you might, or looks like Mike's chimed in?
No, I was going to say something, but I believe independent contractors can apply for that money on their own. I may be mixing it up with the 7A. Megan, do you?
I can speak to this a little bit.
Okay.
I think if you can't show payroll costs, that's not going to work for PPP. But one of the things the CARES Act did was expand unemployment benefits. In some situations, an independent contractor who wouldn't normally be eligible for unemployment benefits may be eligible for the new pandemic relief unemployment benefits. So I think that's the path that was probably intended.
I believe the PPP loans can be used for independent contractors as well, and they will determine payroll based on whatever revenues you brought in. So you need to talk to your lender about how to calculate your payroll, since you are a 1099 independent contractor, and that definition is a little murky. So they can definitely apply for the PPP if they're independent contractors. When it comes to the idle loan, which I believe was the original question,
Right.
They can also apply for the idle loan as an independent contractor. And
Right.
again, the SBA will use whatever information you provide them in terms of revenue that you brought in as a 1099 individual to determine what your loan amount would be. I also would like to say that you can also take advantage of the retention tax credit if you are an independent contractor or sole proprietor, from what I've read. So again, those are things as an independent contractor, because it's a kind of a specific category of individual. We do encourage you to talk to your lenders and your accountants, but they are not barred from applying for idle, PPP, and being eligible for the tax credit, from what I understand.
Well, I have a question then. Is there a difference typically made between independent contractor and sole proprietor? I mean, what if I'm me and I employ me? Is that, are we talking about that being an independent contractor, or
An independent contractor is defined by someone who files a 1099. A sole proprietor is a different category when it comes to when they file their taxes. Correct, right, Alan?
Yes, and I can understand Catherine's question as well. It is confusing. We discussed this within the ADCPA, and what we came up with was most independent contractors will file a 1040 Schedule C, which is income from your profession. And the way and keep in mind, this is coming out April 10th, which is Friday, but the way we interpret it is the Schedule C income is no different than if you were a W-2 employee, and that the PPP loan would be based on your Schedule C income, once again, up to $100,000, not to exceed $100,000. Catherine, in your question, you've asked a great question. You know, I could be an associate as a, let's say, an oral surgeon working for a general practice, and I get paid as an independent contractor, and it's just me, and that's my Schedule C, and I apply this coming Friday. Or I could be a self-employed, but I also have employees, and that's really the big difference. And those folks should have filed by, within the last week since April 3rd, as a sole proprietorship with employees. So you could have a situation where you're a sole proprietor with no employees, or sole proprietor with employees under this. Megan, would you agree to that?
Yes.
Yeah. And we're going to get one second, Chad. We're going to get further clarification as we get closer to Friday. It's interesting that the independent contractor was delayed by a week to give both C corporations, S corporations, partnerships, LLCs, the opportunity to file for the PPP loan a week ahead of time. So I guess we'll get additional clarification as we get closer to Friday.
Thank you, Alan.
Sure.
Here's another question for you all. Once you get the PPP money, can that money be used to pay yourself back for payroll that you took out of your own pocket?
Mike, you want to handle that one?
No, actually, Megan had more to do with that. I'll let Megan do
Okay.
that one.
The clock starts when you receive the loan. So if you paid yourself, say you receive your PPP loan April 10th. If you paid yourself in March, unfortunately, that time period doesn't allow you to include that in the loan forgiveness. So the clock starts for the 8-week time period for forgiveness when you receive the funds from your lender.
Right. And then, Megan, the only thing I want to add to that, and Chad, another good question there, that, Megan, it's limited to $8,333 a month because you're based on this $100,000. So you couldn't pay yourself in excess of $8,333 a month because the formula to arrive at the PP loan was limiting your compensation to $100,000.
Yes, that's correct. So as we determined the 8-week period, the max that any dentist will be able to apply for either their employee or themselves will be an unfortunate number that we don't like to say, but it's $16,666.
Right. Excellent.
Thank you both. There's a request that you all go over what the laundry list is of payroll expenses. Besides healthcare insurance, how about other insurances we pay through the business and business overhead? Any details on that we can offer?
Megan?
Well, payroll costs, as we've said before, is retirement, gross payroll, health insurance, and state unemployment taxes. I don't see anything for any other overhead expenses in that category of payroll. So any of those other overhead expenses will be included in the 25% that you can spend from the PPP loan. So any other expenses that are not included in this exact definition of payroll that is on the screen will be considered the 25% operating expenses.
Yes, and that's my understanding as well.
Thank you. Another question for you. Can dentist owners apply for unemployment benefits?
Yes. In fact, a number of the states are trying to get their unemployment websites set up so that they can accept not only the owners of the practice. Owners, Chad, in this case, you could have an employee owner that has a C Corp or an S Corp. They're an employee of their corporation, so they can apply. And you also have partners in a partnership. They could be members of an LLC. They can apply. And independent contractors and sole proprietors can apply. I would tell you, be patient, because many of the state websites did not have this opportunity before the crisis hit. So they're rebuilding their websites to accept applications for independent contractors, sole proprietors, yourself as being an employee of your corporation, a partner or member, a partner of a partnership, member of an LLC.
That's a great point, Alan. And unemployment and their ability to provide unemployment and counseling is going to vary widely by state to state. Some states are very well equipped to handle a larger volume. They have better counselors on. They provide better dollar amounts to individuals. So if you were denied previously, I do, very much encourage you to keep trying. Because again, like Alan said, a lot of these states just did not have the mechanism for even applying for these individuals, because the law was enacted and they had to scramble to kind of keep up to implement at the state level.
May I ask a clarifying question on this? Are we saying that the CARES Act, because of its provisions enhancing unemployment compensation, does that also extend state law to cover sole proprietors that weren't otherwise covered under existing state law? In other words, are we saying that the CARES Act changes any state laws that might not have included them before?
I can speak to that. The way CARES was set up in this respect was the states are required to enter into agreements with the federal government. And this is going to be one, the basic premise is if you qualify for unemployment benefits under the normal state rules, then you're going to get additional federal benefits added on. But in addition to that, states are entering into agreements with the federal government that expand the people who are eligible for unemployment that previously would not have been. So that's how it's being implemented. And if any of the panelists want to add to that, but that's my understanding of how it's being implemented. And it's going a little bit faster in some states than others, but we're hearing the same things about it being slow and difficult. But it's all premised on a state-federal agreement.
I think it's well said. The only thing I would add to that, Brendan, is that there'll be a federal supplemental of $600 over and above what the state would have normally paid under normal unemployment circumstances.
Right, Alan, and that will be available through July 31. And then there's another significant provision that will extend unemployment benefits. And let's hope this isn't an issue for anybody on this call, but typically unemployment benefits are 26 weeks. There's a provision in CARES that now will extend that to 39, although the later 13 weeks are not with that federal enhancement, or at least that's how it stands today.
Thank you. Another question, do you need to document what the EIDL grant is used for to obtain forgiveness for it?
The EIDL grant is automatically forgiven. So if we're talking about an EIDL loan, that is, you do have to provide some documentation, but again, the EIDL loan cannot be forgiven unless it's rolled into the PPP, and you will be providing paperwork for the PPP for that period of 8 weeks to be forgiven. If you roll your EIDL loan into it, you will have to provide additional paperwork. The grant does not need to be forgiven. It is forgiven already. The way that the EIDL grant plays with the PPP is if you received your advance from the EIDL grant, say you received $6,000 in advance for the EIDL grant, whatever loan forgiveness you receive for PPP, that $6,000 will be deducted from that. So that's how those two play together. If you don't apply for the PPP, even if you don't receive the EIDL loan, you get to keep the grant, no penalty to you, and you don't have to provide any additional paperwork.
Yeah, I would just add that if you are going to take out the EIDL loan and you're not going to use it for payroll, I would still keep a good record of what you're spending that money on. So I'd keep good records on both loans.
I agree.
If you're going for both.
Thank you. There's a request to go over the tax credit again. I think that might be a new concept for people. So I don't know if maybe quickly we could run through that slide one more time.
Yes, Chad, thank you. So the tax credit is limited to $10,000 of wages paid anytime after March the 12th through the end of this year per employee at 50% of the $10,000, up to 50% of 10,000. So let's say if you finally get back to work and an employee made 30,000 during this period, they would be limited to 10,000 of wages. At 50% of 10,000 would be $5,000. And you would perform that calculation, Chad, for all your employees. And that would give you an estimated retention credit that you would then compare to the PPP loan to see whether or not the PPP loan was more beneficial to you than the retention credit, or if the retention credit was more beneficial than the PPP loan. And keep in mind, as of today, we're saying that the PPP loan, once it's approved, has to be funded in your account. I saw some of the comments on the slide here. Megan, maybe we can touch base after I finish this answer. Some of the folks are saying that they're getting word that they have to fund it within 5 days of approval as opposed to the 10 days we just shared with them. So we probably ought to create some clarity, 5 versus 10. But let's just assume you finally get the PPP loan. You have to use the PPP loan for what it's intended for over the next 8 weeks. And as Mike was explaining to you, now that you have the funds, but you haven't come back to work, you're effectively going to rehire your employees. Your employees probably will still be at home, and you have a decision to make whether or not you want to offer your employees, I guess effectively to say to rehire them, have them come off of unemployment, pay them, be able to get the forgiveness of the PP loan during the 8 weeks, and then measure where your practice is, whether or not you're able to reopen at the end of 8 weeks. And let's assume you're not, then potentially the employees will potentially have to be furloughed again and go back on unemployment, but you did get benefit of the forgiveness of the PP loan during the 8 weeks because you used it for what the costs were intended for. Mike, you'd like to add something to that?
I'm hesitant to add anything of a tax nature, so I'm going to leave that to you. And that's the reason why we can't emphasize enough. This is why when you're at this decision point, talk to your accountant about this, because it becomes clear, I believe, when you can actually see the numbers in front of you. Your accountant's done the math, and you can see on paper why it makes sense to do one or the other.
Right.
Mike, here's one I think you can address. Is the ADA doing anything to help its state associations, 501c6s, be included in the next stimulus package, since they are now apparently not eligible for the PPP?
Well, and the answer is absolutely yes. We have already had discussions with our outside consultants who are pressing this issue. They've been in conversations with folks on Capitol Hill, staff on Capitol Hill, that see this as something that, well, many of them see that as an issue that they must address. So that's good to hear. Yes, we are working on it. We've heard from so many of you, and we've raised that with our folks, our consultants, as well as our lobbying staff, and there's actually a conversation going on about this, which is always good, because that means that they've been hearing from a number of people. And this is actually something that I think we can work with ASAE and a number of other groups, and we can create our own coalitions as well. But absolutely we are.
Thank you. Another question: how much can you contribute to your profit sharing plan and trust during the 8 weeks?
I think the question probably maybe has to go a little bit further. How much can you contribute to your retirement plan during the 8 weeks in order to get forgiveness? And I think potentially what it's going to be equal to the retirement plan cost that you would have incurred during the 8 week, assuming that you had normal operations, for the match of the 401k and or simple. And that portion would qualify as payroll cost, which would then equal part of the 75% that we're talking about that the PPP loan has to be used for, at least 75% for payroll and 25% for other costs. The payroll costs include the retirement plan match. So it doesn't, it's not only gross payroll, but it's also the employee benefit, which is the health insurance, and also the, the retirement plan match that make up the 75%. So I think that's where the question's coming from.
Thank you. Is there any discussion around PPP-like programs for large dental group practices of over 500 employees?
I actually, we got guidance on that again. I think it was the last night or this morning. That if the question is, are businesses with more than 500 employees eligible for the PPP? The guidance that I just saw said yes, and we can actually post some of that. Treasury put it out. I think, Megan, you might have seen this as well.
Mm-hmm.
But Treasury put it out, and we can make that available.
And just to be clear, it's not going to be for every business that has over 500 employees. They're determining it based on the size of your business compared to other businesses in your same category. There's also affiliation rules for franchises, etc. So we'll put something up, but you will be able to determine as a business owner with more than 500 employees based on the guidance that we can kind of link to whether or not you'd be eligible.
Right, and I can just to add, I completely agree with Megan. A lot of these rules are existing SBA rules, so they can be, researched. And if you are a business that is relatively small but more than 500, it is obviously absolutely worth really running down those SBA rules, because there are some quirks, particularly for franchisees. And other size rules that are not just the 500 employee rule.
Thank you, Brendan. We have about 5 more minutes. So I just wanted to let the panelists know that, and also tell everybody listening that if we did not get to your questions, we are trying to get FAQs together. So just be on the lookout for those. Another question is, when the money comes in, are we required to hire our staff back to work, even though we most likely still will be quarantined? So even if they are not working, how do we figure out how much to pay them?
Catherine, that's probably a great question for you and Brendan.
Yeah, I'm happy to address that. The way the statute is set up, there's no specific requirement that employees perform their typical duties or show up at an office. The statute is drafted in terms of payroll costs. So my interpretation, and certainly if anybody disagrees, please jump in, but my interpretation, if you are paying employees who are idle or can only do administrative tasks or things like that, that's not going to negatively impact your forgiveness. I think there's an understanding that that's going to happen, and nobody wants people violating stay-at-home orders or things like that. And there's certainly an understanding that businesses may be paying employees who are not productive. There's no productivity requirement. As long as they're payroll costs within the definition, they should be eligible for forgiveness.
Related to that, there's a question in the queue. Do you need to hire 75% of your employees back? What if you just are able to bring back 50% of your employees? Maybe that's a question of personnel versus payroll that you all can address.
Well, again, I'll briefly give my take on this. That's going to impact your forgiveness calculation, so that it's not necessarily improper or not permitted. It just means less of the loan is going to be forgiven if you don't have the same amount of staff back. It negatively impacts your forgiveness calculation. But as the very good slides pointed out, that becomes a loan on favorable terms. So it's not, in my opinion, a terrible risk to take.
Right. I agree, Brent. I think the rule is that you have to measure the number of full-time employees as of full-time equivalents as of February 15th of 2020. And then at the end of June, you need to have at least 75% of the full-time equivalents as of February 15th of 2020 employed in order to get your forgiveness. If you have less than 75%, there's a portion of the loan that wouldn't be forgiven based on this computation.
Right, and I think two things go into that, Alan. That's going to, let's just say you hired everybody back June 23rd. You're not going to generate as much payroll costs, so you may adversely impact your forgiveness that way, but you're allowed to do that. The statute very specifically is set up that you could rehire a lot of people right before June 30th, and that's okay. But that will mean you will likely have lower payroll costs and thus lower forgiveness.
Right.
All right, I want to take an opportunity to just thank the panelists, Mike Graham, Megan Mortimer, Alan Schiff, and also Catherine Albrecht and Brendan Sweeney. Thank all of you. I don't know, Mike, if you had a couple of closing comments that you'd like to make. All right, well then I will handle it.
I'm trying to unmute.
Okay, go ahead, Mike. Yes.
Technology. Okay, I'm running away from it. Well, listen, I know that I have and my staff has fielded hundreds of phone calls and emails and text messages, as many of you who are on this webinar right now. It is this kind of exchange where actually we learn your questions, we learn what the questions are out there. This is really the power of three where we need to share this information, and we will always endeavor to get back to you as soon as we possibly can with the best answers that are available to us right now. But we appreciate all of what you're doing and how we're working together as a team. So thanks for spending the time to be on this webinar, and please continue to feel free to give us your thoughts. Thank you,
Mike, and thank you all. Have a great afternoon.
Thank you.